It's a tale of two markets. This week, the Wall Street Journal reports lower-priced homes across the country are selling quickly, even as the inventory of expensive ones piles up. For more, I'm joined by Lisa Sturtevant, president of Lisa Sturtevant and Associates and former executive director at the Center for Housing Policy. Lisa, let's drill down on that divide. Quote, nationwide, the number of homes for sale priced below $100,000 fell 8.6% in January from a year earlier, while the number of homes priced above $1 million rose 15%, according to the National Association of Realtors. Now, put this into context for us. Why the tale of two markets?
Yeah, I think this dual market is really indicative of a couple of things. On the lower end, what we're seeing is that first-time home buyers are really able to get into the market. It's been a long time. They've been a small share of the market since the recovery, but now there's a lot of pent-up demand, and now they want to get into home ownership. But the supply is really limited. We had really low construction. There's many fewer foreclosures in the market, which would be in that lower end. And then there's been a lot of investor activity that have bought up these lower-priced homes in order to rent them. And on the other end, you have the higher-priced homes, which have really driven home sales over the last few years. This is really a population that is more sensitive to changes in the stock market. So they might be pulling back from housing now as they see their stock market portfolios changing.
I think you're exactly right. Everybody gets worried about the economy and that affects housing. But for this current trend we're talking about, how long before this trend turns around?
Well, I think what we need to see a ramp up in construction, which we're starting to see. We need to see people feeling more confident about their own personal economic situations, which we're seeing. And we need to see job growth and wage growth. And when all of those things come together, we'll start to see movement in the housing market. Earlier
in the show, I mentioned that the Federal Reserve is concerned about inflation. They might be eyeing another interest rate hike. How could that impact the housing market?
Yeah, I think we'll have to wait and see whether there is a hike. We saw a hike in December, and it takes a little while for those kinds of rate hikes to move into the mortgage interest rates. And even if we do see a slight uptick in mortgage rates in the coming year, it's really the fundamentals that affect the housing market. Those things I mentioned, job growth and wage growth, confidence in the economy, certainty around mortgage lending. And those things are going to continue to be strong over the coming months. And so I don't see an uptick in mortgage rates really affecting the housing market in a negative way.
Meanwhile, Lisa, some states are looking for ways to attract young professionals by helping out with their housing costs. Rhode Island awards grants for mortgage down payments to recent college grads. Connecticut is considering a similar bill. What do you make of this trend?
Yeah, this is such an interesting trend, and it really goes to that issue of first-time homebuyers and trying to entice them into the market and to remove the obstacles that many first-time homebuyers face. And this particular generation is having a hard time finding jobs, seeing wage growth being quite slow, and then are really burdened with a lot of student debt. So it could be that this down payment assistance is really the little step they need to get into home ownership. That said, as we talked about, are there going to be homes available for them to buy? And so they might be facing this real reduced inventory. So the down payment assistance might not be a huge help after all.
And it's nothing new with states offering incentives. That's been going on for a long time. It's interesting to see this coming back right now.
Absolutely, absolutely.
All right, before you go, I'd also like to talk about home flipping. Realty Track reports after a 4-year decline, home flipping increased by 75% in U.S. markets in 2015. Is HGTV driving those numbers, or is it something more substantial?
Well, I think there is a bit of an HGTV effect. I mean, it sounds sort of funny, but I think that channel has really changed a lot of what we think housing should have, the features it should have, the number of bedrooms and bathrooms it should have. I think what's really happening is investors are seeing the housing market really rebounding. They're seeing real estate as maybe a safer place for their money than perhaps the stock market or other investments. And so, I think that's part of what's driving the flipping activity.
Always good to have you on board. Lisa Sturtevant, president of Lisa Sturtevant and Associates. Thanks, Lisa.
Thank you.